First, I just want to say thank you to the CfPA group and Samson William for inviting me. I'm very excited to see Samson gonna take the helm of the organization and move it forward. He's absolutely the right guy for that. So I'm very, very excited about it. So what I do a couple of different things. I'm a founder and CEO of a company called Chain House. We focus on a bunch of different things related to events, education, services, and some products that we're building, all related to DeFi, blockchain, and artificial intelligence. I also teach at Columbia Business School, NYU, at CUNY, both business side and technical coding stuff related to blockchain and machine learning. I run a think tank called the Central Bank Digital Currency Think Tank that meets on a regular basis to discuss the future of fiat currency and how it should be digitized. And I've just published a book on the quarter blockchain, and I have another book coming up hopefully later this year with the Columbia University Press on decentralized finance.
Okay, great, thanks. So let's get started. So one big way that crowdfunding and blockchain have very similar principles is that both seek to harness the power of the crowd to create a better source of capital, as well as a stronger relationship between the business or product and the customer or user. So for everyone to better understand the difference between blockchain and crowdfunding, let's take ICO as an example. Jamiel, how are ICOs different from crowdfunding?
Actually, they're, in the strictest sense, they're kind of the same thing. ICOs are, you can consider it a mechanism or a form of crowdfunding, but there are some benefits and there are some differences around doing crowdfunding with what was called ICOs. Today, we don't really call them ICOs. And for those that are not familiar, ICOs stands for initial coin offering, kind of a play off of initial public offering in the stock market. And in an ICO, some project or some organization issues tokens, you buy these tokens, and that organization gets that capital. So that's considered, or was considered, a form of crowdfunding. The challenge, and this is 2016, 2017 was the kind of the heyday of ICOs. The challenge was that some of these tokens that were issued were viewed as being securities, meaning they had the potential to appreciate value. And so it kind of became more than just crowdfunding. But if we were to use the blockchain for crowdfunding, there's some advantages, there's some disadvantages. One is that typically in the ICO world, which today is called STOs, or security token offering, is that there is often no legal entity behind that offering. So in the crowdfunding world, kind of, let's call it the traditional crowdfunding world, there's some legal entity that is involved, and you can identify that legal entity, whether that legal entity is domiciled in the U.S. or outside. There is an existence of that. On the blockchain crowdfunding, there is no need or no requirement for a legal entity to exist, and that comes with a set of pros and cons by itself. One of the obvious cons is that there is no legal recourse if the individual or group of people that did the crowdfunding would just walk away with that money that they just raised, right? So who do you sue and who do you go after? And just the nature of blockchain, that there is no inherent built-in KYC or identity mechanism can make recourse a problem. And just mentioning KYC, if you're doing raising capital on a blockchain, and if you're not careful, if you're not structuring it the right way, you may have people investing in your project, and you are completely unaware of their source of that capital, where that capital is coming from. It could be coming from drug money. It could be coming from all kinds of potentially nefarious activities. And the blockchain intrinsically does not prevent the movement of that money. You have to slap on additional layers and additional mechanisms to kind of help filter where and how you get that kind of money coming to you. And then also, typically in crowdfunding, beyond a certain amount of money, I think it's beyond $500,000, that if you're trying to raise a little bit more money than that, there you do need to audit your books and present that to the potential crowdfunding investor, and that's not really the case in a blockchain market. There is no requirement. There is no legal requirements necessarily to say, hey, these are my books and this is my auditor, and here's a letter from my auditor stating the veracity of my books. So in the blockchain world, it's a little bit more open-ended. Obviously, that's if you choose to go down that route. There are platforms that help you put that together and help protect the investor, and do crowdfunding through the blockchain. But some of the advantages of doing crowdfunding through blockchain, one, I think the most important thing is, well, there's several really important things. One is that your reach is automatically global. So you're not limited to, let's say, USD denominated investors. So you can potentially get investors from globally from anywhere, right? So the minute your project is on the blockchain, as long as you have that marketing reach to get to other people in other parts of the world, then they are also potential investors for you. Now, are there legal ramifications to that? Yes and no. I mean, yes, there is, and no if you choose not to, or if you choose to ignore those legal ramifications. But there are accounting and legal issues to do that. But one of the advantages of doing crowdfunding on blockchain is that you have pretty much an immediate global exposure, right? The other, I think, important thing is liquidity. So even if I am an investor and I put my money into a crowdfunding project and I get back something in return that represents my stake in that project, whether it's debt or equity or tokens or something else, and if I want to exit my position or exit a portion of my position for whatever reason, a year later, I feel like, hey, I need some money for for college or whatever it is. In the traditional crowdfunding world, that may be difficult to do, finding a liquidity, because these projects are very, very specific. Some of the projects may be very, very small, might be difficult to do, but there is potential a greater degree of liquidity on a blockchain, assuming there's infrastructure set up in way to kind of help find a buyer, find potential consumer of liquidity. So there is that benefit of doing crowdfunding on a blockchain. Now, is liquidity guaranteed? No, liquidity is not guaranteed. There are cases where a project is not doing well and you're going to own tokens, and you're not going to be able to offload it, and the value of those tokens are going to drop significantly. But in general, just all things holding constant, liquidity is going to be a big deal. The other thing that you can do with crowdfunding on the blockchain is you can embed business rules in the tokens, and tokens represent some stake in that crowdfunding project. You can embed business rules such that those rules are open and transparent. Anybody can look at those rules, because those rules are also sitting on a blockchain as smart contracts, or what's called smart contracts. And those rules can enact or be activated based on certain triggers. For example, I might have a crowdfunding token that replicates into two, right? So basically, I'm kind of doing kind of like the analogy of a stock split, or a reverse split if I want to create more liquidity. I can do that based on certain triggers. If, let's say, a certain, to give a very facetious example, the weather hits a certain degree for 10 days in a row, boom, that token doubles and everybody else's tokens double, and I've basically done the equivalent of a stock split. Those type of rules, you can embed them. Obviously, you would have there's room for building in very creative rules, and you can create those kind of rules, and that therefore your issuance, that crowdfunding, can be far more robust, and has a lot more characteristics and kind of a deeper meaning for a crowdfunding investor who's coming in to pick up some tokens. And so those are some of the benefits. The other maybe benefit is that your portfolio can be publicly viewed. If you are looking to put up your portfolio and share with somebody, say, hey, this is my portfolio. You can go say, hey, this is what I'm holding. I'm looking to sell this and looking to sell that. And so disclosure potentially becomes easier if you've got a portfolio of tokens.
Great, that's very fascinating. So now that we've talked about how ICOs are a form of crowdfunding and kind of what the current state of the market is, where do you see blockchain and crowdfunding working together in the future, specifically in DeFi? How did the two technologies really work hand in hand, and how do you think different models will develop in the business landscape?
I think at the most fundamental level, the next 10 years, the next 20 years, all of finance, and that includes crowdfunding, because you can consider crowdfunding as some aspect of finance or some vertical in finance, right? All of finance will move to tokens, right? And does that mean you're going to be buying tokens and shopping for tokens, looking for tokens? Maybe the next couple of years, yes, but eventually it will blur into indifference. So you're buying IBM, you're buying 1/100th of one share of IBM. You're getting it as tokens. You don't really know that you're getting it as tokens. It's just sitting in your portfolio or sitting in your broker's account, your brokerage account, and so that all will just move eventually to tokens. And I think there's a lot of noise right now about NFTs and non-fungible tokens, and it really is much of it is centered around art and creative things. But I think where we will see NFTs really intersect with DeFi, and I think that's where a lot of the focus is going to eventually be, is private banking. So it's going to be the idea that, hey, I'm going to do a very customized crowdfunding issuance just for you as the investor, and your position in that crowdfunding is the ownership of an NFT, right? Or one or more NFTs, right? Let's say I'm Goldman Sachs, and you come to me and say, hey, I want to purchase a financial product, and that financial product has this set of economic behaviors. It has 7% yield. It's, a weighted average of AA rating in terms of its credit risk and things like that. I can kind of mix and match a kind of set of economic parameters, and then Goldman Sachs customizes and creates that product for you. Obviously, they're going to go through their risk management process to make sure that that is a product that they want to underwrite. And basically underwriting products, financial products, unique financial products, and then pushing them out in the market will be NFTs. They will be in a form of NFTs. And I believe that's where DeFi and NFTs will intersect, and crowdfunding will be part of that scenario. So I will be able to potentially create a portfolio or tranches of crowdfunding, and hopefully through blockchain, that cost of creating that funding, even though it's kind of high in the crowdfunding world right now, because not all projects get fully funded, but that the cost of that friction lowers significantly because through blockchain and through issuing tokens, then I may be able to move into creating different tranches of crowdfunding for the same project, and that can include NFTs. And an NFT in a crowdfunding scenario would mean that you potentially own a certain unique position in a project, which might have certain redemption rights and certain rights to certain products. Well, this means that I own that product when it comes out, and all that kinds of stuff, right? And so I think NFT, and I would categorize crowdfunding through blockchain as a form of DeFi. Kind of the first use case of DeFi is really crowdfunding.
Okay, yeah, like you said, NFTs have been a very buzzy word lately, and it's a really unique and promising perspective you have about it with private banking. I don't think I've heard anybody else talk about that. So that's really interesting. I think we have a little time to take maybe one question from the Q&A. So Jamiel, if you want to pick one, or I can pick one.
Yeah, go ahead, please.
Okay, so Samson asked, for blockchain-based crowdfunding, if there's no legal recourse for fraud, how are the investors protected?
They're not protected. So, if you don't have that legal recourse, there are scenarios where you can do crowdfunding through blockchain and build that legal recourse. But traditionally through ICOs, and Samson knows this, he's just messing with me a little bit. There is no, like and this happened quite a bit. where the company or organization or a group of people raised capital, they got their money, and they literally the next day it disappeared, and there's not much you could do. You can't call up the FBI or this, whoever, because there's nothing that you can really do. There may be criminal recourse, there may be criminal action that you can go after, but that's going to take time, it'll take money, and obviously the right resources like the FBI are going to evaluate. Are they going to go chase down somebody that just stole $100,000 from the market versus somebody, a bigger fraud, things like that. So it's kind of you're rolling the dice. And even if they do get convicted, then you're going to go and pursue a civil case after that. You win the civil case, but then you're getting no money because they've spent the money and all that kind of stuff. And so it's a messy scenario.
So do you think regulators and law enforcement agencies are going to proactively try to create a framework around that, or?
Around what?
Around the fact, like you said, that
yeah, I mean, they have. So what we have today, it's called STOs, right? So a security token offering, which is a regulated offering, right? And so now we've come into a different market, which is regulated, and I can raise capital through STOs. But I've got to identify myself. I've got to identify and show my books and things like that. It pretty much is the same thing as you would do, let's say, in terms of the processes, maybe not as extravagant as an IPO, but you're kind of going through this process where you have to disclose and things like that. And what that has done is has shrunk the market. So before it was like gangbusters, anybody could do an ICO, and so everybody was doing one and trying to just collect that money and run off with it. I think the failure rate was over 90% for these projects, maybe over 95%. But with the STO market, the failure rate is not as high. It's much, much, much lower. But the amount of capital that's being raised has shrunk because obviously the barrier to entry now is higher. There's a cost to doing that kind of stuff, and which there should be, right? There should be a cost to raising capital. And it's kind of a filter. But I think the future is the DeFi is coming back, rightfully so. And I think crowdfunding will be revisited down the road. There is this kind of bad taste in our tongue because of ICOs. I think it'll be revisited, and we'll see how that looks like in the future.
Great. Plenty more good questions, but I think that's all the time we have. So Jamiel, thank you so much. Some very valuable insights you gave. And just thank you to the CfPA in general for allowing us to have this conversation.
Great. Thank you so much.
And thank you, Varun, as well. Excellent, super interesting conversation. Obviously, from the questions, I think you could see we probably should, schedule an hour or 2-hour session for this type of thing. But we know your time is very valuable, so we are going to jump into a quick SPAC, special purpose acquisition company and space financing video. But perhaps, Jamiel, Varun, feel free to stick around. Maybe if you want, you can answer a few questions in the chat while we're in the video, and then obviously everyone's welcome to come back to the networking session after, and maybe pick your brains if you're still around. So thank you again.
I won't be able to stick around, but if somebody emails me questions, I will be happy to answer them.
Thank you so much.
Yeah, thank you guys. Take care. Bye.
Thank you.